Hello, hello, hello. Welcome to the webinar. Apologies for being a couple of minutes late. I seriously, I was making a cup of coffee. It's all my fault. Um, Welcome to today's webinar. I'm going to show some slides in order to update everyone on what's going on and who we are. And that involves sharing the screen, finding this beautiful presentation. Boom. And hopefully you can all see this. So if you're in the right webinar, then you're here to discuss how analysts can shift fintech purchasing and M&A. Our conversation today is very much on the M&A side of the conversation, as hopefully you will have picked up from the advertising around the event. If you've not been in Zoom before, which sounds unlikely, then at the top of the screen there are some options which will allow you to submit questions. There's we welcome your questions. We have obviously seen these slides many times before as panelists. We're not exactly bored by them, but any questions that you want to put to us is going to be more interesting than anything we have to say for ourselves. I've got some housekeeping points, which are also quite mundane. You are muted. Yeah, we're here to talk. You're here to ask questions by typing and to listen. We're recording it. And we will make this recording available to people who can't make it. Lots of people, can't make these things. Also, it means that because there'll be a recording, you don't have to write everything down if you want that. Because this is Zoom, Zoom has some functionality for the subtitling. If you would like that, let us know. You may even be able to turn it on natively if you've got the Zoom thing. Oh, fantastic. Great. Okay, someone's enabled that. Excellent. Thank you very much. And then we'll have Q&A at the end of the presentation. And I must admit, I'm going to be a bit sneaky. I will peek at the Q&A. So Alex is going to speak for a little while, Sophie too. I will, at the end of our little bits, I'm going to glance to see if there are any questions that are like hyper relevant. But to be honest, we're going to be focused on the presentation for the first part of the webinar. We'll probably address more of the questions at the end. I want to start off by introducing our panel. Despite the label in the bottom of the screen that says I'm Chris Sedgwick, unfortunately, I am not Chris Sedgwick. Chris Sedgwick is our wonderful director of analyst relations here at CCGroup. I'm not he. I'm Duncan Chapple. For the last 5 and a bit years, I've been head of analyst relations at CCGroup. Today's actually my last day. I kind of graduate and move on to the world beyond CCGroup, and I'm delighted to spend part of my last day speaking with Alex and Sophia about this topic. Alexandra, you might know, is one of the stream leads at CCGroup. She serves on our executive committee and heads our emerging fintech stream. So as a business, we are organized kind of into around vertical markets. We're organized around the markets that our clients want to sell into. And Alexandra leads our I think our fastest growing stream, feels like it's our fastest growing stream, which is around emerging fintech. And Sophia Furber works as a fintech research analyst at 451 Research. People will know 451 is a 25, it must be up to 25 years old, mustn't it? And analyst firm that is part of S&P, so it's part of the Standard & Poor's market intelligence function. They're particularly known for I think they're particularly known for having a very keen eye on private technology firms and on the funding experiences that these organizations have on the way to IPO. And so we are really delighted to have her to join this research. The spark for this conversation is some really extensive research that Alex and her colleague Daniel Lowther commissioned. And so I'm going to turn the presentation over to Alexandra at this point and enjoy my cup of coffee and allow her to step through basically how is it that we've come across this huge bank of data out of which we're pulling the insights that we're using today. So Alex, over to you.
Thank you, Duncan. I think I'll request remote control now so that I can move the slides. Hopefully I can do that. But in essence, CCGroup commissions these sort of reports, and it has been over the last few years. So we tend to call them our catalyst reports. And we like to keep a pulse on the market, in this case, in fintech in particular. So before this report that we launched recently, we did one in 21 when the fintech market was booming. So we tend to do these in every 2 years or so to kind of see how things are evolving. And obviously, as we know, with the changes and kind of like the macroeconomic events that we've been experiencing over the last few months, over let's say 12, 18 months or so, there's been significant changes in the market. So we expanded our sort of research from just trying to understand the buying behaviors of financial technology to kind of understand the appetite and what kind of drives acquirers when it comes to looking at potential fintechs that they would like to purchase. So more kind of focus on the M&A side of things. So there are two separate sort of areas that we're sort of looking as part of this research. I'll be talking through more around kind of like the behaviors and like what influences buyers around fintech technology, and then we'll sort of look into the acquisition side of things a little bit later. So in essence, I guess what we found is that with the sort of increase in pressure when it comes to the cost of living crisis and really the impact that fintechs need to demonstrate when it comes to kind of like generation of revenue and profitability, that has changed the way investors are buying technology. And even then later on we'll talk about when it comes to buying the actual business, fintech. But what we're seeing is that the shop window has really become quite key. What does that mean? That's effectively the fact that fintechs are being evaluated from afar. So it's really important that we're kind of looking at the right channels and the right types of content, all of the right things when it comes to so all of the different areas that sort of fintech buyers or those looking to buy fintech and sort of the financial services technology, and then also the company are sort of keeping in mind. So when we sort of look at just before we move on to that, this is just an overview of the type of institutions and decision makers that we survey. So there's around 221 buyers across a number of markets in Europe, and there were around like banks and fintechs as well. So when we look at the things that really matter for buyers, or to get in the buyer's radar, that in terms of channels and content, it's important that those are broad and moderate in terms of the depth, right? So we look at the most important channels. We see that trade media, advertising, and internal business analysts are among the most important. And interestingly, we're actually seeing that industry analysts are coming sort of towards the least important section when it comes to channels. But that's because at this point, they are sort of looking for information that is not too deep. So industry analysts and analyst reports will become much more relevant when it comes to the selection process, which is quite key, as we know. So, and also if you look at the most important internal business analysts, they tend to consult trade media and the reports produced by analysts to inform their decisions. So in terms of channels, whilst it's not the most important, to start with, it's definitely quite key that fintechs keep, industry analysts in their sort of minds. When it comes to content, it's quite clear that the reports produced by analysts are quite important when it comes to them having a better understanding of the sort of financial technology that they're looking to purchase, or even the companies then. So we'll be looking at that a little bit later on. And so when we look at the selection process, so this is, post long listing. Interestingly enough, when we looked at the respondents, those looking to purchase technology only contact the vendors at the shortlisting or even the selection point. So this is why, again, the sort of making sure that the shop window is, so to speak, is kept nice and tidy is really important. And this is why having the right mix of channels and content, it's so key, because then this is what's going to enable them to be kind of like forefront of mind for buyers. But again, when it comes to the selection process, social media, interestingly enough, search and events are the most important channels. And we know that social media has been gaining quite a lot of traction. A lot of these channels tend to link through to content that is hosted on different sites. So again, like, trade publications, nationals, business titles. So it's not just the content that's native from those channels, but it gives them the opportunity to learn about the business, learn about the business leaders, but also access to different types of content. So when it comes to channels, it's quite a key for them. Industry analysts, again, they are kind of like in the middle sort of bracket when it comes to their relevance, because again, they're quite deep in terms of the content and the access to knowledge. So they are quite important. And again, from a content perspective, they're sort of top of the list. So the reports produced by analysts are really sort of valued for sort of decision makers and those looking to buy financial technology. So we're seeing that, and we're focusing on the role and kind of like the influence of analysts and the insights that analysts sort of give us, and decision makers as well. We've found that when it comes to the selection process and kind of like the top 5 reasons that would prevent selection for decision makers, lack of awareness among industry analysts is top of the list. So that again sort of reinforces the message of how important it is for fintechs looking to expand or looking to kind of like get it in front of the right sort of buyers and decision makers to have strong industry analyst relations, because the unbiased kind of like insights the analysts produce about these businesses, and as Duncan was mentioning earlier, the sort of in-depth knowledge and sort of analysis that they make on these businesses quite key for decision makers. So again, it's really important that that's sort of forefront of mind. And again, lack of news. So decision makers from the kind of like the those that are looking to buy technology, but also those that are looking for M&A opportunities, having a sense of momentum for these businesses is really key, and that's reflected through news. So a lack of news is kind of like a red flag for them in a way. And then there's other things as well that sort of tend to prevent selection, like lack of information online, which is in a way tied to lack of news, and then sort of lack of evidence of them delivering success and having sort of real world impact. And that's kind of where sort of case studies have a really big role as well. So that's everything on the sort of like technology purchasing side of things. I don't know if there's any questions at the moment. Shall we pause briefly? There's one.
There's one. Shall I actually read the question out and then Alex, I think you can and I think you can try to address it. Before you answer it though, can I just go back to slide 5
Yeah,
and draw attention to the URL at the bottom of the page? So so the findings that Alex has been speaking about, they are available in a report that we've published, and you can use this address bit.ly, let me just go back to that, sorry. bit.ly/fintech 2024. If you go to that address, you can download the the whole report there. Yeah, so
absolutely. You could also drop me a line or an email, and I'll be more than happy to share a copy and to answer any further questions that you guys may have.
So first question here is like what's important in getting things right? Yeah, is there, in fact, let me just go back to this slide. That slide might help you. Like, what's the most important thing in getting it right? Is it the right channels or is it the right content? Should we just focus on the important channels and content? Like, what does this mean in terms of influencing buyers?
So that's a great question, and I think that it's having a mix of focus in terms of the right channels and the right content. And that goes again, if you think about the fact that fintechs are being assessed and evaluated from afar, then it's really important that we're sort of utilizing the right channels to get in front of buyers and decision makers, right? So that's the most important and the important ones, because there'll be variances and differences between markets and industries and so on. But it's not just the channels that we need to get right. The content's really key, because you may sort of get their interest at first, but if the content isn't informative and it's not addressing the key things that they're looking to understand about you and your business, then you'll lose them, whether it's the kind of like the shortlisting or selection point. So it's really key that there's a focus on a mix or the right mix of channels and content.
Yeah. But there's a second question which actually I might have I might have a go at first, which is how are industry analysts not important as a channel, but they are very important as a kind of content? And I guess that's particularly referring to the awareness stage. Yeah, how is it that is happening? Do you have any thoughts about that, Alex, or shall I pick up on that?
I have some thoughts, but you're more than happy for you to answer, Duncan, and I can sort of chip in as and when.
I think a big part of this is just the business model of the analyst firms. You know, analyst firms sell to tens of thousands of businesses, but not like hundreds of thousands or millions of businesses. So it's quite easy to access analyst insight online because there's so much content available. You know, a lot of it is licensed and made freely available either by the analyst firms or by people who've licensed the content. But actually, it's quite hard to get in touch with, to have spoken word interactions with analysts unless you're attending their events or you're a client. So I think it's simply access. It's quite hard to speak to an industry analyst, but it's much easier to access their reports.
Yes, absolutely. And I also think that at the sort of the initial stages, they buyers aren't really looking for too much depth when it comes to the content or even those sort of channels. So it reflects across channels and content. It's broad and moderate, as I said earlier. So those that have access to a wide array or range of businesses across different industries, but that don't go too much into detail. And then when it kind of moves to the selection point, depth becomes key.
Hmm. And I suppose here, I mean, maybe we're a little loaded when we talk about this being less important, but I suppose what we mean is it's important to fewer of the participants in the study. Yeah, I'm sure it's very, very important to the people who use analysts. Sophia, I'm sure your clients, they completely rely on you. But the people who don't have the benefit of working with you, they don't know what they're missing out on, evidently. Yeah. Shall I move on to the next part in terms of what acquirers said? So just for context, when we did this bias study, which Alex has been speaking about, obviously you have to survey more people in order to find the people who are really relevant. Yeah. So the report is based on, I think, the most relevant 250 people who were most heavily involved in buying. But obviously the researchers have to speak to other people in order to find those people. So out of, I think, like 360 or so people who were actually interviewed, we found 101 or 103 who were involved in M&A. So after this report was published by Alex and Daniel last year, looking into buyer impact, we've taken a look now, and we've taken a look at people who are involved in merger and acquisition processes in the fintech sector. I'm going to step through some slides, but some charts really showing these data. The thing about these data is that they show you, what the situation is. They don't necessarily show you why things are like this, why are analysts used in this way. And that's part of why we've invited Sophia to join us, because the data show us that analysts are present, but it doesn't really tell us exactly what analysts do when they do what they do. So that's part of what's going on. One of the things that we asked these participants was some questions around just the reality of their work and how they do things. There's an awful lot of data in the study. I've just picked out a few highlights from the data here. One of them is about what is driving acquisition. So in the dark green bar, we've got all of the participants. So that is like, I think that 350 or something like that. And then in the orange bar, we've got the people who are involved in acquisition and mergers. And then the little pink thing is the difference between the two of them. And there are a few bar charts like this coming up. So remember that pink bar is the difference between everybody else, the buyers and the acquirers. And then the orange bar is just the acquirers by themselves. And as you can see, well, there are some very similar, they're very similar, aren't they? The drivers are quite similar between these two communities, and that makes sense because the investors are wanting to look for things that answer pain points. And then, the buyers are interested in solving pain points. So it's not surprising that there's a strong alignment. But you can see that there are some particular use cases that are going to make the cash registers ring for the investors a little bit more than they are for buyers. Buyers, for example, are more, like being unhappy with what they have now is more of a thing for people who want to upgrade the systems that they have, but it's maybe not a particularly interesting driver for investors. But on the other hand, acquirers are really more likely to be motivated by expanding into new areas, increasing revenues, increasing client demands, regulatory demands. These are all very important. They're the most important, but they're significantly more important for investors than they are for buyers. And the timelines were also part of the questions that we asked about. If I just go back to, sorry, I went over that slide on timelines. We look at timelines. Most acquisition timelines are about 3 to 11 months. Some are shorter, some are longer. And then in terms of particular priority areas, this was a question where we got lots of feedback. This is this chart goes all the way over to the wall, if you imagine. But again, there were some topics that were clearly very important for both audiences. But here you can see there are some areas where, around in cloud, user experience, lending, wealth management, they were significantly more important for acquirers than for the buyer audience in the study. In the next section, I'm talking more about exactly the involvement of analysts. We found, for example, that 64% of those involved in merger and acquisitions say that analysts are involved in most of their transactions. So in 51% and above of their transactions, 64% of those people involved in the acquisition said that analysts were involved. So that's more than I expected. Similarly, when we look at influence, a majority of the professionals involved in M&A, so 52% in total, said that analysts had either some influence or considerable influence on their acquisitions. And then when we kind of drilled down a little bit into awareness, yeah, so influence and awareness are a little bit different. When we looked at awareness, we saw 55% of acquirers said that industry analyst reports, separately from analysts, industry analyst reports help them to develop either some or considerable awareness of technology vendors. And it's a bit interesting if we put that into context. If you remember what Alex was saying about buyers, analysts were there on the list, but for buyers, it was, one of the top 3 or 4 things driving buyers' awareness of technology vendors. If we put that into context, in our study, we offered people 14 options. And when we look at what is driving considerable awareness, so not just some awareness, but only considerable awareness, then analyst reports come fifth rather, out of those 14 options in terms of what is driving considerable awareness. What really strikes me looking at the way that these acquirers are using information is that they are using many more information types than buyers. These acquirers are using most of the information types that we asked them about in the survey, but analyst reports are coming, in the top handful when it comes to increasing their awareness of specific vendors. In the same way that Alex asked about deal breakers with buyers, we did the same when we asked about what are deal breakers for investors. And here you can see low analyst awareness came 4th for acquirers after the lack of evidence success, news coverage, and the firm's responsiveness. So let me just draw these points together and kind of outline the picture a little bit that we got from the data. So what acquirers are telling us is that roughly two-thirds of acquirers say that most of their acquisitions involve analysts in some way. Acquirers say analysts are influential on most of their acquisitions. Most acquirers are using analyst reports to drive their awareness of, there's a typo here in point 3, awareness of analysts. Sorry, that's my mistake. It should say awareness of vendors. Fourthly, analyst reports are above the content types that most drive acquirers' awareness of vendors, in the top 5 of the 14. And then finally, low analyst awareness is one of those top 5 deal breakers. So it's a deal breaker for buyers, and it's a deal breaker for acquirers. I'm going to just take a peek to see if there are any questions. No questions on my part of the study, which is great news for me. And so I'm going to go forward to Sophia's part of the study. Sophia, I'm going to hand over to you, but let me know when you want to go backwards and forwards. I think it's going to be easier for me to go backwards and forwards than you. Basically, yes. What we'll be asking you to do is like give some context on, is acquisition still happening, and what is that like? And so I'm going to empower myself to press the first button. I think I can probably do that spontaneously. But let me know when you need the next one.
Fantastic. Well, first of all, just wanted to say thank you so much, Alexandra and Duncan, for having me on the webinar today. It's been really interesting to see how our reports actually get used once they go out into the wild, and the influence that we have on the industry and buying decisions specifically. So yeah, we often work with CCGroup. CCGroup has facilitated a number of introductions to companies who have given me briefings as an analyst. I know that a lot of really great conversations that I've had have started with an intro that has come from CCGroup. So we really like working with you guys. And yeah, very happy to be here today. So just a quick outline of what I'm going to look at today. I'm just going to do a bit of scene setting to walk you through the landscape for M&A. I'm going to talk a little about a bit about what we do as analysts at 451 Research. And then the last bit, my favorite bit, is talking about the information gap. So what is the information that analysts wish they had when they're analyzing a fintech that fintechs often don't share with them? So I'm going to be going into that. So I'm going to start off with some numbers on the M&A landscape. So this was put together by my colleagues in the M&A team. We have a product called the M&A Knowledge Base. So we track global fintech M&A, or many other sectors as well. So the numbers that you can see here are from fintech, payments, and wealth tech. As you can see, deal value and deal flow is sort of fairly consistent. Deal values are way down. In the first half of 2023, we actually did see a little bit more activity in the fintech M&A space. The reason for that was because there were a lot of lower valuations of fintechs, which made them more attractive targets for larger companies to pick up. I think there were also some forced sell-offs as well. We saw a little bit of that in the crypto space. However, a burst of deal activity in Q1 and Q2 was evened out by a slower Q3 and Q4. Go to the next slide. Oh, yes. So this slide here shows strategic M&A versus private equity investment, and it will be no surprise to you that strategic M&A is accounts for by far and away the larger amount of deals. So I think this is an interesting, I suppose, complement to the slide that Duncan showed earlier, looking at the reasons why fintechs or other larger companies would buy a fintech. So, for example, entry into new markets, regulatory pressure, desire to acquire new tech. But I mean, I think strategic M&A is still very much alive and well. What I would say is there just hasn't been quite as much of it as we expected to see. I think one thesis was that because of lower valuations, that we'd see a bit of a wave of consolidation. I think another thing that we felt might happen in 2023 but didn't is there's certain sectors of the market that do feel quite crowded at the moment. I guess like embedded finance, like certain parts of payments, there's just a lot of fintechs doing the same thing. And, it's a big market, but there is not room for everyone. And, we wondered if that could be a catalyst for more M&A if some of those companies are, essentially pretty decent, but like they are just not able to function as standalones. So we didn't see that in the way that we thought we would in 2023, but let's see how things shake down in 2024, because that could potentially be a driver. If there's a fintech that can't quite stand on its own 2 feet, but maybe, they could provide a larger player with access to a different market, or they've got a great piece of tech, or they just have a really fantastic team. So we may yet see that, but that was one. It slightly defied our predictions in 2023. So on to the next slide, please. Actually, I do see we have a question. Should we pause here to answer that?
Totally. Let's absolutely do that. So
oh, that's a CCGroup question. Emerging markets. Do you want to come back to that later, or
we'll come back to that later on?
Okay,
totally,
cool.
Yeah.
Great. And if anyone does have any questions about the data, feel free to get in contact. I don't know if you've got my contact details at the end of the presentation, but I'm sure that Duncan or Alexandra would be happy to facilitate an introduction if there's anything in that data set that has piqued your interest. Because we can go into much more granular detail there.
There is a second question that just popped in, which maybe is more in your wheelhouse.
Yes.
People have wheelhouses anymore. But how much demand do you see from investors looking to acquire fintechs? I mean, in a way, your chart before is about that, isn't it? You know, and maybe a more intriguing question: are there any regional disparities when it comes to fintech investment?
That's a really good question. So my remit is the EMEA region. Now, fintechs. You know what? I have to say, it's when I've had briefings with companies, I do always ask them if you're in acquisition mode, and a surprising number of the larger and mid-sized companies actually do say, yeah, the right thing came along, we consider it. I don't think I would have got that answer a year or two ago. So I think the appetite is out there. I guess for some of like the larger card networks, I mean, like they constantly seem to be picking up fintechs here and there, and I don't think that's going to stop anytime soon. I guess I would have expected to see banks maybe doing a bit more fintech M&A because they can afford to, and there are some great reasons for them to do it. But they are often quite cagey when we ask them about that. So it's a little bit hard to get a handle on that. But yeah, I would say for sort of mid-sized fintechs that are doing well. I think neobanks, do you know what? I feel like neobanks are buying things. They're often doing it quite quietly. We did see, I think 2022, we actually saw quite a bit of activity in that arena. So kind of companies like Oak North have made quite a few like nifty acquisitions. I would imagine there's going to be more of that to come. I don't think that appetite's gone away. But yeah, great question. Thank you.
And another question, which maybe I touched on with one of my charts, are there particular areas that are being avoided by investors? Like in our survey data, we did offer like a very, very long list of areas and invited people to talk about where they were focusing. And in the report, we focused about the things on the top, things in the bottom concealed.
Oh goodness. I mean, I think people are squeamish about crypto. I mean, obviously there have been some fairly high profile kind of distressed acquisitions of crypto firms, but I think that's I'd say people are a little bit squeamish on that still. Or maybe there's a bit of there's not clarity on where that fits in to the strategies of larger players. So if I had to pick one, it would be crypto.
Perfect. Good.
Okay.
Thank you.
Right. So yeah, investors' questions. What are the kind of questions that or like requirements that people have when they come to 451 as a research house? So typically people will be looking to us for market and industry analysis and insight, early consideration of market segments, identification of prospects. That could be, acquisition targets. It could be partners. I think partnership is a really interesting theme in the fintech world, and people want to know who they're dealing with. That's really, really important. And then, yeah, obviously, good old due diligence on targets. One thing I think it'd be a good moment to share here. There's sometimes some confusion around the S&P name because a lot of people historically have associated S&P with Standard & Poor's and the credit ratings for companies and sovereigns. I always make it really clear when I'm dealing with new contacts, and also probably should make it clear on this webinar that my role and my team's role is completely separate from that side of the company. There are people on ratings who deal with financial services. We've actually got a whole new team that's actually rating the stability of stable coins, which is really cool. But yeah, we are a totally different part of the organization. So we can do due diligence on companies, we can do vendor profiles of fintechs that we think are really interesting, but we don't do a credit rating. And yeah, I'm actually not allowed in the same room as people from ratings unless I have a chaperone for compliance reasons. But I think when just kind of explaining what us research analysts do, it's important to make that decision when you're coming from a big brand such as S&P. Yeah. Next slide, please. Okay, so yeah, key fintech issues. So innovation, especially we are looking at the rise of bank fintech partnerships. As you all are well aware, banks cannot and do not do everything in-house. They buy in a lot of expertise. Sometimes that can actually tip over into M&A when they decide that, you know, rather than just partnering with a company or maybe making an equity investment into them, they actually want to buy them. So I think that's quite a salient theme for M&A. As I mentioned earlier, I think it was something we thought we'd see more of. We may yet see it. Obviously, the lead-in times for that would be pretty long. So maybe that's why we haven't seen so much activity there. I think historically we've always done a lot on the user experience of fintech. So really looking into bottlenecks in customer journeys is something that we do a lot of. Investment, so you know, looking at how companies are building a payment strategy that really drives growth and good customer experience. Embedded finance and the growth of that market and the kind of the sort of as a service business models within fintech. And then looking ahead, I suppose emerging user expectations within fintech. I mean, sort of the ever raising bar for expectations around customer experience and security, but you know, we're also looking at stuff like new digital forms of money, CBDCs, stable coins, crypto. You know, we're exploring how people want to engage or maybe don't want to engage with those forms of exchange. So that's just a really broad brush look at the kind of themes that we look at as research analysts. Next slide, please. Okay, so how would we help acquirers feel the pulse of the fintech economy? So I'm just going to walk you through a couple of our different sort of styles of report or different products that we have. So there's market monitors and forecasts. So those are more kind of like traditional forecasts. So I'll give you an example of a cool one that we did recently. We have a consumer payments market monitor. So that's a model that we have built, which we've been forecasting which types of payment method are going to grow the most between now and 2030, both in terms of volumes and value. We have the M&A knowledge base, so the graphs that I just shared with you earlier come from that. It's a treasure trove of information on M&A. Voice of the connected user landscape. This is actually a consumer survey. So we go out and poll people who are actually using certain technologies. So, you know, we've got quite a lot of examples in the sort of banking and payment space of that. They're very, very cool snapshots into what end users actually think of. I mean, not individual, it's more at a kind of industry aggregate level rather than individual companies, but it is a good pulse in terms of, you know, how people are using payments, or like what they actually want from banks, or what they might be prepared to pay for a certain service, like say, for example, instant cross-border payments, you know. Then, yeah, market insights. So those would be, actually, this is probably the most relevant for this audience. We do a lot of vendor profiles of fintechs. Those are kind of 2 pages, which we usually write after having sat down for a fairly extensive conversation, maybe about half an hour with either a C-level exec or someone who's like maybe CMO or a product owner, which we really get to know that fintech and their products and services, where they sit in the market. And we do a SWOT analysis, we do our take on the fintech and why it's interesting. And we write those on any fintech, really, from if it's done a seed round and it has a live product in the market and we think it's cool, then we'll write one about it. But we can write those vendor profiles of even like fairly large publicly listed companies, or if there's a fintech that's like a need to know in a certain market, we write about them. Anyone that maybe has like a tech proposition or like a business model that we think is something that's like net new or really interesting. You know, like I wrote one recently which was about fintech that provides a way for migrant workers, mainly in like the Gulf countries, which is like a massive market, to basically, instead of helping them to send money back home to their families in their country of origin, it allows them to sort of pay bills and buy products and services on behalf of their families. So, for example, buying medicines, paying school fees, and it's done by a really cool network of partnerships with large retailers, hospitals, etc. So yeah, it's just if there's something that's like really net new, we'll do that. But also like kind of big, more like kind of conventional vanilla need to know fintechs will do that. But we really enjoy doing those. And I'm going to come on in a bit to talking about the kind of questions that we ask and what we really, really want to know when we have those conversations. And then the last format of report that we do is the technology and business insight. So those are thematic. They are a deep dive into something that we've chosen because we think it's particularly interesting or timely. So my colleague in the US has just done a big one on buy now, pay later. There is my colleague in India has just done a really cool one on instant payments and just the direction of travel for instant payments. And I've just done one on cross-border payments, which is a bit of a pet topic of mine. So those are really in depth. They're like kind of dissertation length. Yeah. So that's what we do, and that's how we these are different sort of products and services that an acquirer could use. Now, Duncan and Alex, please stop me if I'm taking up too much time, but I'm going to hop to the next slide and just go through the information gap. So what do analysts wish that fintechs would share with them? So I actually kicked this over to my colleagues in both North America and Asia, and it catalyzed a really lively discussion. I have some interesting things to feed back to this audience. So I think the number one thing that I heard was actually financial information. Now, obviously, we'd love to see what your profits, losses, revenues, transaction volumes are, but we understand it is not always realistic that you are able to provide that information with us. So I think if we can't have that, one thing that is really important for us to understand is your monetization strategy. Like, yeah, just basically like, yeah, how do you make money? So for example, I guess like would there be like revenue say linked to like consumption of APIs or the number of transactions? Is there a recurring fee component? And if we go to the really big picture level, where exactly are you inserting yourselves into, say, if it was like a payment company, like where are you inserting yourselves into the payment value chain? I think that that's really helpful. And I think sometimes to be totally honest, I do feel sometimes fintechs kind of skate over those questions or can fudge them a little bit, but I think it's very, very important for us to understand that. I think partnerships also, that's really important for us, and this can cover a number of things. I mean, one of them is how do you partner yourselves with other tech providers or players in the fintech ecosystem, because realistically there's very few fintechs that do everything themselves in-house. I mean, I can name a few. I think Adyen likes to do a lot of stuff in-house. I was met up with Thought Machine the other day, and there's a lot of stuff that they like to build themselves. But for most fintechs that I encounter out in the wild, they will have they will be partnering with people on KYC, or if they're a fintech that's in the lending space, okay, well, like, where is the money coming from? Whose balance sheet does it sit on? I think these are all questions that are actually really important for us to understand, because it kind of gives us some insight into how like robust your tech stack is, like the risk elements at play there, and also because we're big geeks and we just like to know this stuff. Yeah, and I think just I guess another thing that I would say is really like the big takeaway from my colleagues was, how do you guys play in the fintech ecosystem? Because I think one question that we like to ask is sort of what your competition is. And I think a lot of fintechs will tell us, we don't really have a direct competitor because what we do is really, really new. So we sort of try and phrase the question a different way. Like, for example, who are you displacing in deals? Who are you looking to intercept or displace? Are there other people that are kind of playing in the same ballpark as you? I think that is actually really important for us to understand. And then the other thing I guess I just wanted to say is case studies. We analysts really do love case studies. I think if we're not able to get information on stuff like profit and loss and concrete figures about how you're growing, it is really useful for us to get a sense of the type of clients that you have won. I think also for fintechs who are a little bit newer, or fintechs that are playing in really crowded markets, if you've signed, say, an enterprise client that's like a household name, that can kind of help us to place you a little bit. So, for example, there was a French fintech called Swan that was in the embedded finance space, which there's a lot of noise in that market right now. But when we sat down with them, they were able to share, look, we haven't been around for that long, but we've got Carrefour, the French supermarket chain, as a client. We've got a kind of cards product that we're doing for them. And you're like, okay, cool, like that. And then there were other, obviously, pieces of the information jigsaw that the CEO was able to provide. But that was, I do think the case study and the brand names, if you're in a position to share, is so powerful for analysts. And I'd say that's something that has a bearing on which companies I decide to profile as interesting prospects. I also think with case studies as well. This is kind of almost. This is a just for fun point to finish on, but it is serious as well. Often when I speak to clients when they're doing things like, say, SME lending or, say, providing payment products for merchants like e-commerce platforms, etc., I ask, okay, what sectors do you play in? And some people say, okay, we're particularly active in I don't know, like fashion retail or like hospitality or something. Other people say, oh, we're agnostic. We work with all sorts. But one thing that's really nice is when you can actually give examples of companies that you work with, and even if they're not known names, it's interesting because it just gives us a little bit of an idea into your personality as a company and how diversified your portfolio is. So I don't know if I can name the fintech, but it's an SME lender, a digital lender that many of you will be familiar with. I wasn't getting much info out of this. He was just said, we just lend to all sorts. And I was like, okay, can you tell me some examples of companies that have kind of really jumped out as being interesting? And he said, okay, we have an SME that we've lent to that has actually seen really rapid growth and has been a really good client of ours. It's a guy that he breeds crickets and worms as pet food for exotic animals. And apart from being a fun point, there were two reasons why that was important, because it showed us that the portfolio was diversified versus other examples he'd given us. But it also told me that he's someone who knows his clients, and even though they're a digital lender where a lot of decisions are automated, they still actually do have that interaction and that understanding of client needs. So, fun factoids like that, I know we're analysts and like we're serious, but, we actually do like that kind of detail as well. Also makes the reports more readable. So that's all from me. Thank you, guys.
That is fantastic. Well, one of the things I remember, one of the notions that you put forward in one of our preparatory calls, Sophia, was the question, who are you displacing?
Yes.
And I think that is a really, really powerful question for fintechs to consider. And I think also for acquirers, I think it really helps acquirers to frame the way that they're looking at a competitive landscape, and just to think like, what about barriers to entry? What about switching costs? How effective are these incumbents that you want to steal food off the plate of?
Yeah.
How effective are they?
Mm-hmm.
And I think you give I really like what you said about case studies, that if you can't give financial information, and if you can't give information about where you sit in the ecosystem, then you definitely need case studies. It reminds me of my boss when I was an analyst at the company that's now Umdia. He used to say to vendors, look, you can be lazy, but then you can't be stupid. Yeah. And and I think that it's true that not every vendor can supply every piece of information to analysts, but there's but they've got to be able to provide something, otherwise they just kind of bland out and appear to be identical to their
Yeah. I would just add one thing to this. If I ask a question as an analyst about where are you in the competitive landscape or who are you displacing, it's not a gotcha. It's an example for you to shine.
Yeah. Absolutely. And I don't know if anyone has coined the phrase blandscape, but it kind of comes to mind that there are a lot of vendors who, it's not as bad now as it used to be 10 years ago. Luckily now marketing is so much more developed, with personas and account-based marketing. and surely nobody's going to the market to say, well, we provide seamless connectivity, seamless financial connectivity for everyone. Hopefully nobody is, and we do that with solutions. Hopefully nobody is saying that anymore. But it used to be worse than it is. We've had some questions, both submitted in advance. So I don't know if either of my co-panelists can see the notes screen that I've got in front of me, but there are some questions in this note screen. Not everyone has got the luxury of two screens as I do. But then there are also some live questions submitted by people who've joined us for the question. I'm going to start with actually the most recent question posted in the Q&A. So we show that analysts are there in the selection process, and Sophia, you've given an idea of the sorts of things that people are asking you, and the kinds of deliverables that they want from you and your colleagues as an analyst firm. But I mean, why is it that you are important? What is it that means that acquirers are pulling you into their conversations and into their workflow? Like, what is it that they're getting from you, that they can't get from others? I mean, I think Alex has given some hints earlier on about when she spoke about the deal breakers, that there are lots of things, responsiveness, having success stories, and being able to give information. There are lots of things that maybe they can't get directly from the fintech, so they're getting from you, or they're looking at a whole market and they're not approaching individual market participants. They want to get a view of a particular market sector. But why do you think it is that people are pulling you into these conversations? What kind of sense do you get of the value you're delivering to them?
I think objectivity is really important. I think, S&P as a brand, like, we place a massive premium on being objective. And I think it's kind of seen as that sort of stamp of quality that, we're not going to be swayed or biased. Like, we do not have an agenda. I think that's really powerful. I think also the fact that we speak to so many people, for every company that you see that we mentioned, we've probably spoken to about 10 others. Like, we're just always kind of roving, going to events, speaking to people. So just the sheer numbers of conversations and companies that we're coming into contact with. I think one thing that I often think about is that people in banks and neobanks and big fintechs, they are so busy at the senior level. They are so busy when I speak to them, and I think they just do not have the headspace and the bandwidth to be doing all of the reading that we do, speaking to all of these people, going to all of these events, reading a lot of books, going on training courses about different tech or etc. But we have the bandwidth to do that. But that's what we can give back to them, is that the time and the headspace and the energy to think about a lot of this stuff, and to have the helicopter perspective, which you can't have when you're sort of laser focused on being in the top layer of a fintech, or in part of a bank.
Totally. We are up on the time boundary. There are a couple more questions I want to ask you, but I know that some attendees will have to drop. So I just want to put up Alex's email address if people have got questions, follow-up questions, if they want to get hold of this supplementary report that we've written about analysts and acquirers, then Alex is your point of contact there. There's another question that we've got, which is about like regulators and customer centricity.
Yep.
And I think, like, at one level that's a trivial question, but at the other hand, it's actually a very important one, because of the way that fintechs are trying to resolve frictions in the way that organizations are trying to access financial services, and the way that consumers are trying to access financial services. So the question is, okay, but regulators scrutinize fintechs, and that is all the time producing new technology demands as well as new regulatory demands. But on the other hand, we talk about the way that fintechs have got customers at the heart, and businesses are at the heart of the mission of fintechs to lubricate and make life easier for them. Mm-hmm. So how do we deal? I mean, is that a paradox? Is it a synergy?
Great question.
What's going on if regulators or unhappy customers both have to be addressed?
This is really, really interesting because I think, yeah, customer centricity and the consumer is so much at the heart of what fintech is all about. I mean, I'd say one thing on that note, I think is going to be very interesting, which we are going to be really keeping an eye on, is embedded finance. Because I think one thing we're seeing in a lot of fintech business models is there is now a layer of remove between there's different intermediaries, right, before you actually get to the final consumer. So the example of an embedded finance company, they're providing, sort of financial architecture and the ability to provide cards or, kind of debt products. That will be then provided to like a big retailer or another company or an airline who's then interfacing with the consumer. So there's that, there's one degree of separation there before you get to the final consumer. The question is there going to be would there be issues from the embedded finance fintech themselves in terms of, say, consumer protection, security, proper KYC, good onboarding, really having like a good consumer experience there? Are they doing proper due diligence on who they're actually onboarding in the first place? Are they going to onboard companies that are going to give the end user a lousy experience and have, slapdash processes? So I think it's kind of interesting to kind of think about the consumer as an analyst. Yeah, just when so many of there's that degree of separation. But yeah, I mean, I think if there are companies that are having lousy consumer experiences or they're getting dinged by the regulator, we'll absolutely look into that. And, we take that extremely seriously.
Fantastic. I've got a few more questions. I see that there are still some participants here. I don't know if you've got a few more minutes to pick up on a few more questions. I'm just greedy and selfish. One of the things that, if I can just go back to this slide here, I know when we talked about these three things these three information gaps. I mean, this was not the only feedback that you got from your colleagues. Yeah, I mean, there were other things they were looking for, and even I promised to add a few more of them into this slide. But one of the questions that we had is about talent retention. When you're addressing when you're speaking with I think investors in every market are concerned about talent retention around a transaction. Yeah.
Yep.
But fintechs are also in highly competitive talent markets, and I know that we like to say that we are in now we're in an employer's market, and there's tech layoffs, and but it's still the case that for highly talented fintech professionals that there is still an imbalance in the demand and the supply for talent. So how is talent retention and talent acquisition a big part of the conversations that you are having with people? Is it something you're proactively asking about?
Yeah, it is. I mean, I think, one thing we ask, are you in hiring mode or are you laying people off? Pretty simply. We just kind of asked that bluntly because, we have to ask about headcount. Yeah, I mean, I guess one thing is like I will always ask in my briefings, what is your biggest challenge as a business right now? And you'd be surprised at the number of people who say that it's talent retention. It's specifically around the, I think, engineering side. Like that's, yeah, I think that is a tricky one. Maybe kind of compliance as well, although I think a lot of some of the grunt work that gets outsourced to other companies. But yeah, I definitely think engineering, there's a big war for talent there, and a lot of these companies really depend on having really fantastic engineers. Some of the companies that are doing really well are actually have a lot of talent in I guess like Asia and Eastern Europe. Interestingly, like I didn't realize what a big talent hub Ukraine is, like still is. So that's quite interesting, but that's completely by the by. But yeah, the talent retention thing, it's a great question, and yes, it does come up in our conversations. And I think, what, if there's a fintech that is like, is good at retaining people and they've had a pretty stable workforce, that's really something to shout about. If you have if your company or a company that you're representing can say that about themselves, definitely mention it if you're speaking to an analyst.
But I guess also if businesses and fintechs prioritizing innovation, then they have to have the right people.
You have to have the right people,
talent. So it's all sort of intertwined, I suppose.
I've got enough questions for another hour, right? And we can do that. But I can see that the number of participant number is not going down. So, you know, there's some interest in this conversation. Can I ask our panel, are there any questions that you would be interested in answering? I mean, I know that there are some that particularly interested me, but if there are any that like really high on your list, you know you've got great answers to, then let me know.
No, not from my side. Thank you, Duncan.
Okay.
Yeah, no, come.
Fantastic. Well, look, in that case, why don't we quit while we're ahead and wrap this up? Thank you. I mean, many extended, huge numbers of thanks to our speakers. A reminder again with that bit.ly link, Fintech 2024, Fintech with a capital F. If you want to get the report on buyer influence, and then this additional report on acquirer influence will come out. Will come out soon. Natalie had to leave early, but says, you know, thanks all. Really love the insights. You know, that is, you know, big hearts back to Natalie. So thanks for that, and thanks to the six of us who are still sticking on this call at the bitter moment for your dedication and tenacity. Yeah, that's been really really wonderful. The recording will be online sometime. You know, I don't know when. You know, sometime in February. And please visit us at CCGroup PR. We've got a brand new website this week. It's so beautiful. Even if you don't like public relations, it's worth visiting just for the graphic design. So thank you so much.
Thank you.
Thank you. Thanks again, Sophia. It's really interesting.
Yeah, it's been great to be here. Thanks for having me.
Really lovely. And Sophia, thank you so much for joining me.
Thank you. Bye. Bye.
Cheers.
Bye.